In front of us lies the largest wealth generating opportunity of all time. And we're only 3%. If you just think of a little scale, and we're 3% of the scale, and all of that is blue sky. That's what we've got ahead of us. Your game is to hold on to your goddamn tokens from 3%, $3 trillion to $100 trillion. You don't need leverage. You just need time. You need patience. You need to expect 35% drawdowns in bull markets many times and not be phased. You need to expect once every 4 years, a down 70 or down 80% market, you'll feel terrible. But 3 years later, you'll be at all-time highs and accelerating through them and your wealth will be compounding.
Crypto is on track to reach a staggering $100 trillion market cap, and only those who hold through the noise will reap the biggest reward. That's the latest insight from Raul Pal, CEO of Real Vision and a veteran macro analyst. According to Pal, success in this space isn't about timing the market or chasing quick gains, it's about holding strong through every cycle. Bitcoin's long-term trajectory rewards patience, and the journey from $3 trillion to $100 trillion is a matter of endurance, not speculation. Pal emphasizes that you don't need leverage or high-risk strategies to win, just time and the resilience to withstand deep corrections. A 35% drop in a bull market is completely normal, and brutal 70–80% crashes every 4 years are inevitable. However, history has proven that those who stay the course will witness new all-time highs and see their wealth multiply over time. Stay tuned until the end of this video as Raoul Pal shares more mind-blowing insights into the truth behind the crypto market and what's coming next.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
So we're going through this profound period of change where first we're going to get this super acceleration of productivity, of asset prices, something we can really participate in, beyond which it becomes a very dark world I call the economic singularity, which I don't think of as a pessimist. I don't know what this means for us and how we're going to figure it out. So I kind of figure out we've got 5 or 6 years to unfuck our future, to solve the issue that we don't know what even the study of economics means in the future, what financial markets are, what assets are, what businesses are. So it's the period we need to really focus on wealth accumulation and to try and make as much money as possible. You'd rather go into this with your lifestyle covered, your future secure, and then we can figure out this complicated future. What I don't want to be doing is figuring it out while launching a new business in the early 2030s and everything has changed. So, it's kind of, we can see it ahead, like the steel mills in Sheffield in the UK or Pittsburgh in the US. We can see that these things are going to be closed down. We can see there's immense opportunity before it happens. So that is the ride we're on. And this is one of the key things for crypto that I try and tell everybody. It's like, I don't care whether you believe in, the libertarian angles. I don't care whether you believe that the technology is not for you. What you need to believe in is your future, and this is the only opportunity you're going to get to do that in this period of time. People need to understand what is going on here. This is not just Bitcoin and a pristine collateral layer. It's not a bunch of cryptocurrencies that people are trading. What this blockchain technology is the security truth layer to the internet. Without it, the internet cannot progress with AI. AI, we're bringing in something we've never had before, non-human activity. Non-human activity and human activity will need to prove what is what and who is who. But also, as we go increasingly digital, every day is more digital than tomorrow. Tomorrow is always more digital than today. Everything from every contract that we do, all of this stuff, and humans live by a system of contracts, whether it's tickets, agreements, everything, even me turning up on the Zoom call today is a contract. All of these contracts, some have value, some don't. The ones with value are generally done via paper and some sort of ledger system of which somebody notarizes it, if you think about a property. But what we're moving towards is a way that we can do this digitally in a way that is trusted because there's no central party in the way. And so this scales everything from ticketing to value to artwork to money to everything. This blockchain also proves who is a human, who isn't. So we can prove these things. It's a proof layer that is distributed amongst thousands or millions of people that confirm what is the truth, as opposed to one trusted party. So this scales as AI scales. It has to. Without it, we couldn't have AI, or we would entirely break society, money, and everything else. So even if I just take the trend rate of adoption, I think you've got this chart. The trend rate of adoption of wallets keeps increasing every day as new people start to use this. Now, as I said before, I've compared new wallets to IP addresses. I rebased them in the past back to 5 million as a starting point for the internet. It was at 92, 93, and I did 5 million wallets for crypto. Now we've all got multiple IP addresses, we have multiple wallets, so it's pretty like for like comparison. You extrapolate that out, by the end of this year, next year, we should get to about billion wallets. Okay, that's a lot. And now how many users? Well, that's a matter, Jamie, you're more qualified than I am to figure out what the exact number of users are. But the point being is this scaling is going to continue, and I think it's going to keep accelerating because now we're bringing these other economic actors, the AI agents in front of us lies the largest wealth generating opportunity of all time. And we're only 3%. If you just think of a little scale, and we're 3% of the scale, and all of that is blue sky. That's what we've got ahead of us.
Money is evolving before our eyes, and crypto is leading the charge. The market has already hit $3 trillion, and Raoul Pal predicts it will soar to $100 trillion by 2034. With governments drowning in debt and inflation eroding savings, people are searching for a way out, driving the rapid adoption of digital asset. Blockchain is becoming the backbone of online transactions, eliminating middlemen and enhancing security, while AI is stepping in to automate tasks and even facilitate crypto payments. This shift is gaining momentum, with the number of crypto wallet users expected to surpass 1 billion soon. The way money moves and businesses operate is transitioning away from traditional systems, and those who recognize this transformation now will be far ahead when the mainstream catches up. Now, let's dive back in as Raoul Pal shares more groundbreaking insights on the future of crypto.
Your game is to hold on to your goddamn tokens from 3%, $3 trillion to $100 trillion. That's the game number one. That's not trading around it. That is not using leverage to try and juice extra returns out of a asset class that produces la-la land returns anyway. You don't need leverage. You just need time. You need patience. You need to expect 35% drawdowns in bull markets many times and not be phased. You need to expect once every 4 years a down 70 or down 80% market. You will feel terrible. But 3 years later, you'll be at all-time highs and accelerating through them, and your wealth will be compounding. I had dinner last night with a friend of mine who invested first Bitcoin at $3, and he still holds it to this day. He's now become one of the richest people in Silicon Valley, and very quietly just did this one trade, didn't really do anything else. So that's one thing. The other thing is once you're in this space, you start to see other people making more money than you. You see them making 100x on a meme coin or 1,000x. They start showing their P&Ls on Twitter, and you start to feel like you're just not getting it right. You're holding in Bitcoin, Ethereum, and Solana it's only gone up 250% in the last year, and it's just not good enough. You've got to stop thoughts like that. That FOMO will force you to buy stuff you shouldn't buy. You will go too far out of the risk curve, and you will end up caught as the tide goes out, and you will lose the money. And if you lose your money, you lose the ability to participate in the mega trend. Rule number one, don't lose control of your tokens. And that brings you into, okay, so how do I asset allocate? It's complicated. There's so many cryptos. Well, if you just want to keep it simple, stupid, just buy Bitcoin, go to the beach and don't do anything. It'll outperform any business that you ever create in terms of annual performance. I mean, that's a horrible thought that I've realized. But at 150% performance, even if it comes down to 50% a year, most businesses don't grow at 50% a year. So it becomes very difficult to even justify starting a business, which is a bit weird. But really, how I prefer to see this space is it's a broader adoption than just Bitcoin. Bitcoin is one of the big use cases, but it's not all of the use cases. And so I would just take the three most prominent coins of the moment, which is Bitcoin, which is, let's call it the pristine collateral, the security, the safest asset. I would take Ethereum, which is the broadest, deepest asset. And I would take Solana, which is the new fast entrant that is rapidly gaining massive adoption effects. Hold those with 80 or 90% of your portfolio and do nothing. Just don't need to do anything. Then there is that inner degen inside of you, that part that wants to trade other stuff, that wants to trade in memes. Well, do that with the 10% of your portfolio. I pretty much guarantee, because I've tried this a couple of cycles now, that bag of investments is usually worth about zero at the end of it. You've had a lot of fun, but you've lost all of the money in it. But you'll be more than offset by your major allocation. So it's things like this that are really, really important, is don't use leverage, because leverage means when the price goes against you, you lose your tokens. Don't buy stupid shit. Don't go too far out the risk curve with too much, because if that token doesn't work, you've lost control of your money and your ability to participate in the big trade. Don't FOMO into stuff because you don't understand it either. You don't know, you don't have an edge, don't pretend you do just because your mate told you. You know, the reality is that every time a friend of mine tells me to buy some meme coin, and I'm in a weak moment, maybe I'm tired, maybe I'm hungover, and I buy it, it usually goes down 80% almost immediately. So don't trust your friends either on their tips, because they're not very useful for that. But these are really the important things. The other thing is, how else do you lose your token? A lot of people look for yield. And I don't have a problem per se with yield. I've never been a yield guy. I'm a macro guy. I'm a price guy. But yield, if you're putting your tokens in control of somebody else to generate returns and you don't know where the returns come from, it probably works for a period of time, and then at some point it may well blow up. And then you've broken rule number one. You've lost control of your tokens. So you need to be really careful with leverage. The other thing is, this is a bearer asset. What a bearer asset means is you need to take control of it yourself. Now, you can keep it on an exchange, and I think the big exchanges, the very big global exchanges, are relatively secure. But the beauty of this asset is you can be outside of the system by storing it yourself. And that is storing it yourself on something like a ledger device. Doing that gives you the maximum flexibility. Yes, it can be a bit terrifying, but the key is not letting somebody else take control of your coins. Again, you'll be so upset if you don't have your tokens and you lose them because you got hacked, because you were storing them on your MetaMask wallet and you went to a website to buy some stupid meme coin and it was a scam. You've got to be really careful. This wallet cleanliness, separating your assets, using a different wallet to operate in the Web3 world, versus a different wallet where you store things safely. Do these things and you will increase your probability of not fucking up. We will all get something wrong somewhere, so don't worry about that. But this is my kind of recipe for the highest probability of success, where I can bring as many people along on the ride as possible. And that would make me very happy indeed.
Success in crypto comes down to discipline and smart decision-making. Raoul Pal emphasizes that the best strategy is to hold strong assets like Bitcoin, Ethereum, and Solana without overcomplicating things. Many traders lose everything by chasing trends, using leverage, or trusting unreliable platforms. Instead, staying patient and avoiding unnecessary risks is key to long-term success. Risk management is essential. Leverage can wipe out entire holdings, hype-driven investments often crash, and handing over assets to unverified platforms can lead to devastating losses. Keeping crypto secure is just as important. Long-term holdings should be stored safely, separate from wallets used for trading or Web3 interactions. Mistakes happen, but following these principles significantly reduces the chances of losing everything. Crypto rewards patience and discipline, and those who stay focused on long-term growth will ultimately come out on top. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.